Cash flow versus profit. Which one matters the most? If you had one without the other, will your firm survive, thrive, or is it lights out? Well, in this episode, I am going to deep dive into the difference between cash versus profit and which one you need to focus on in your firm. Stay tuned. Welcome to Say Yes to Profits. Here at Say Yes to Profits, we help consultants build million-dollar firms while tripling their cash flow and profits without stress, struggle, or burnout. Now, our goal is to make you smile when you log into your bank account because you have more money, more profits, and you're paying less taxes. So subscribe, follow, and listen up. And as a result, we will make it rain money in your business. Now join me on the path to say yes to profits. Hello, consultants. I am Octavia, the virtual CFO to consultants and the CEO of Say Yes to Profits. I'm super excited about this episode because I've been asked this question a lot. Should I focus on cash flow or should I focus on profit? So today we're going to break down the difference in those two. Now, before we jump into the content, make sure you hit the subscribe button right now. Go ahead and click it right now. So, cash flow and profit are both vital financial metrics that can determine the fate of your consulting firm. It is essential to understand the difference between the two in order to make valuable decisions regarding your firm's performance and financial health. So I'm going to go over the difference between the two, and then I'm going to tell you which one is most important. So let's start with cash flow. What is cash flow? Cash flow is the way in which cash moves in and out of your business during a specific point. The money will flow in a certain way and it will flow out in a certain way. And there's primarily three ways that this is done. Number one, via operating cash flow. Now, operating cash flow is when the net cash gain from your firm's business operation takes place. To maintain your growth, you must have a positive cash flow in your consulting firm at all times. And then you have investing cash flow. Now, it shows the net cash gain from your firm's investing related activities, such as investing in securities, buying physical assets like equipment or property, or selling assets. The final is financing cash flow. Financing cash flow indicates how cash circulates between your consulting firm and your investors, owners, or creditors. Now, what is profit? Profit consists of the net income you earn after deducting all expenses. You can determine your net profit by reviewing your profit and loss statement or your income statement. Those are normally used interchangeably. Profit can then be distributed among the owners of the company, the shareholders, and it can be as in dividend payments, or you can take the profits and invest back into the firm. Now, like cash flow, profit also can be broken down into three different areas. You have gross profit. It's the revenue consultants earn minus the cost of rendering the services. So minus your direct costs. And then you have operating profits. You can call it basically earnings before interest and taxes, otherwise known as EBITDA, EBIT. Like operating cash flow, it indicates the net profit your firm generates from its business operations. And then you have net profit. Net profit is basically when your firm takes all of the revenue that is earned minus any expenses, taxes, and interest. What's left over is normally net profit. Now, the article to this episode, you will find a chart where I identify in great details the difference between profit and cash flow. You want to click the link in the episode description for the article so that you can go and view that chart. Now, the question remains, what is more essential for your firm? Is it cash flow or profit? This answer is not as simple as you may think. Both are required to make informed business decisions and to develop business strategies. What you must understand is that profit is how you keep score in business. As a matter of fact, I often tell my clients, you solve problems for profit. If you're not generating a profit, are you really solving a problem? And then you have cash. As I like to say, cash is your business's superpower. You cannot survive without enough cash flow. You see, a firm can generate a profit and still struggle to cover its expenses throughout the month, still struggle to maintain a positive cash flow. If you find that your firm is in the position where it is constantly generating a profit and you want to celebrate, great. But if you log into your bank account and you feel like, what is going on? Because your cash flow is not where it needs to be, then you have a cash flow problem. Here's what you want to do. You want to focus on improving the numbers on your balance sheet. That's an episode for another day, but basically, you want to make sure that your assets always exceed your liabilities. The main takeaway from this is that you want to position your firm to not only generate a profit consistently. As a matter of fact, you want your firm to generate a profit per service line, but also at the end of the day, you want your firm to remain cash flow positive. So a good metric I want you to keep in mind. For profit, your firm wants to have a net profit margin of 20% or better. For cash flow, your firm wants to have 3 to 6 months of cash flow reserve, operating capital saved at all times. Now, I know I gave you a lot in this episode, so if you have any questions or comments, definitely leave those below. This is Octavia, the virtual CFO for consultants. Until next time, say yes to profits. Toodles.